Hi guys, welcome back to Be Rich podcast and happy Sunday morning. I hope you're doing well and you had a wonderful evening last night and you're doing well and you're feeling better and you've got some fluids in and things are looking much brighter.
Right.
Yeah, me and Dhanaa are back in black, as you see. The black boys
Black
are back. Yeah. So anyway, before we get into the conversation, Dhanaa, how was your week so far? Did you have a good week? Did you manage to invest something this week?
No,
Though we had one day of nothing. Nothing came in your range of tiffin-coffee, which you liked.
Many of them are in tiffin-coffee range, but the budget for this month was finished.
Oh, that's too bad. See, that's a problem. Keep in mind, to save some in reserve. Split up your budget. But you're happy with whatever so far you've invested this month?
Happy, sir.
Happy. Great. That's good to hear. I had gone and recorded with A to D. We're going to see that video when it comes out. Seems to be quite a remarkable person. So anyway, those of you who do watch his channel, keep an eye out. I'll be coming there on that video probably next Thursday. He said. Yeah, Thursday or something. So
our soldiers assemble there.
Anyway, as Dhanaa said, whatever few soldiers me and Dhanaa have, please assemble there.
No, not my soldiers. Share soldiers.
I don't have any soldiers.
Let's see in the comment section, sir.
I'm well past soldier age, man. I'm retired age.
Okay. Then
hopefully retired with what you call honors, as they say. When you retire from the army, I'm a decorated soldier. So hopefully, not in the what's the other word?
I think everyone can relate, sir. Amaran movie was released. Major Mukund.
Yeah, hopefully not a disgraced soldier. Getting back to the point. So what we have today?
Sir, that homework, NATCO homework.
Yes.
At the time, I was reading the earnings call report.
Yeah.
So I applied the same format to the 4 banking stocks, sir.
Very good.
So,
very proud of you. You have taken some initiative.
Yes, sir.
I wish all of you take initiative like this.
That also in the comment section they mentioned, please discuss about the difference between this. Like, can you differentiate how was the difference between the 4 stocks? So, and then I come with the earnings call report, what they are, the CEO, what they are telling in the earnings call report, what they are answered, what their plans into the future, so that we can discuss now, sir.
Sure.
First
Sounds
of all,
like a good idea.
South Indian Bank, sir. CEO P.R. Seshadri. In the earnings call report, the highlights was profit up significantly to 404 crore from 275 crore in the Q2.
Okay, almost doubled.
Growth in the retail and gold loans, 206% and 11% year-on-year growth.
That's good.
Yes, sir. And improved asset quality. Gross non-performing assets at 5.56% versus 6.5%.
That's also great.
Year-on-year.
Yeah,
the difference was 1.
Yeah. That's a huge number.
Yes, sir. Now the future plans, if the people are asking what their answer was, focusing on the retail segment and SME segment and high quality loans. They are not focusing on the gold loan majorly. And expanding the digital banking initiatives and the target core fee income growth. So they are focusing on that segment. Now the Tamil Nadu Mercantile Bank.
Wait, let's finish this.
Yes.
So this is good. All the whatever you have said, shared with South Indian Bank is fabulous. But the question the viewers are going to have is, yeah, Dhanaa, we know all this. Right now, the price of South Indian Bank is, I don't know, 23, 24?
22, sir.
22. They're going to ask you, when is it going to go to 50? And what would be your answer?
That also in my list, sir, that 52-week high was 37. 52 low was 22. But how can I convince them it will be bounce back? But it will take long time, 5 years or 10 years. Definitely it will bounce back. But how will I convince? I don't know, sir, the idea. But if the correction was happening, even it goes for the 2018, I was personally prepared because of research in the South Indian Bank. So I will strongly consider in the stage of when it comes to the cheaper value, I will definitely consider.
Correct. Because even if you're buying it at 22 and let's say it goes up to, 35, you're still seeing very good capital appreciation, right? You're almost doubling your money. So it is good consolidating this and buying this. And in the long term, if you see the bank, the way the growth it's being looked at, the markets he's looking at, and the projections he's looking at, it'll become a great bank going forward, right? And that is the reason you should invest. Not on, will this 22 become 55 when?
Not on the price.
Yeah. Then you're not buying the bank, you are trying to gamble.
Yes, sir.
You're trying to predict weather. It's like me and you off camera talking about the cyclone that may come or may not come. Will there be holiday next week or won't there be holiday? Because Dhanaa wants to plan his life. So he's asking me, sir, if there is floods next week, will we have holiday? Yes. When do you think this holiday will likely come? Because he has to make plans with his girlfriend. So, yeah. So all that has to happen. So I understand. That's the same way you guys feel about South Indian Bank stock and South Indian Bank price, but it doesn't work like that. We are investing and we're hanging on. And if you see all kinds of growth, it's always been exponential. Exponential graphs will be hovering for a long time like this. And suddenly it'll start trending up. Even in your Nvidia stock. If you look at Nvidia prices, there is things in the market which will come to a point where inflection point where the prices will appreciate for good quality companies and good quality stocks. So South Indian Bank is like that. You are given an opportunity to enter. When is it going to boom? I do not know, because the quality of the stock is good. So it will get a chance. When you should exit, it's not because it's not going up. You should only exit South Indian Bank when the quality of the stock has become poor. That means the bank is not performing well. The guy running the bank is not okay. It's not looking good. Then you should exit. But you should never exit once you've entered the bank because it is not going up.
Okay, the share price.
Yeah, that is a very stupid reason to exit. So a lot of people will be like, I bought it at 22. I've been holding it. I put 1 lakh into it, and I've been holding it for 2 years. It has not gone anywhere, sir. So
Now the Gen Z mistake I need to state this. That was when the rights issue was happened. It was around 28 to 29, like that. The price was trading, sir. At the time also, I have entered into the South Indian Bank, and then when the rights issue was coming closer at the record date time, it was nearly around 37, and then it fell back to 35, 33, 20. Like now it was around 22. But at the time also, I have made mistake around 28. I bought not in the tiffin-coffee rate, just a lump sum investment. That also made one video. Sir, if I buy the tiffin-coffee rate, only the way I need to look for the South Indian Bank only, sir, because that is my tiffin-coffee rate. That time you tell about one story, like 80% of your portfolio is full of the South Indian Bank. Then wait, just keep the 20 rupees or 30 rupees amount for the 5 days, 10 days, and then you look good to the other banks or ITC like that. Sir.
Correct. And
now also the mistake was happened, sir. Now you need to tell, because my Gen Zs are like that.
Yeah, you should not be putting lump sum. And if you have lump sum, right? Let's say you have 20,000 rupees. Instead of buying South Indian Bank, if you feel like throwing all 20,000 into the market and one day buy gold. You're safer off just buying gold. Buy gold piece and keep it there. Not that gold is going to become double in 3 months, 4 months time, but at least gold will keep in pace with inflation. South Indian Bank may not.
It will act against.
It can go either way. Inflation might be pushing prices up. South Indian Bank may stay low because Anand keeps telling us this repeatedly, and we fail to listen to this, that markets can be far more irrational than we can remain solvent. And that is simple way of saying it is, the price of South Indian Bank may not be where you want it to be when you suddenly need your money back. Let's say you put 20,000 rupees into South Indian Bank thinking it's going to become 30 rupees. Right? 3 weeks has gone by. Suddenly a EMI is due. You forgot all about the EMI because that day in excitement you wanted to buy, you bought it off. But South Indian Bank has gone down by 2 rupees. Even if you sell and take your money back, you'll still be short. That is a fear. Which can happen. So at least in gold, it can happen in gold too, price is correct in gold, but that likelihood of it dropping by such a huge percentage is far less likely in gold. Let's say you bought it at 65 rupees, it might be at 62, 63, right? It will not go all the way down to 40, 50. South Indian Bank from 22 can go to 18, it can go to 12. Yeah, 7 also it can drop down to. And will it drop down? I do not know. It can happen. And it's valid happening because that's how markets are. So you can't predict these things. So that's what my advice would be to you Gen Z folks. Tiffin coffee ranges. If you're daily spending 100 rupees on tiffin and coffee, that is it. That's where you should stay and consolidate. If you want to buy a Natco or you want to buy HDFC or IndusInd Bank, for example. IndusInd is a 900 and it's a fabulous price to buy IndusInd. But if you don't have the money for it to take into consideration, keep putting it in gold. Put 100 rupees for 9 days into gold. Then change it remove it from gold and then buy an IndusInd stock. The reason why I'm saying put it in gold and not keep it in your bank account is if you tend to keep it in your bank account, suddenly some weekend party will come, some friend's birthday gift you have to buy. Suddenly that 200 rupees, 500 rupees you would have saved towards buying IndusInd will vanish. If you keep it in gold, suddenly when you realize you have to buy your friend's gift, you'll be stuck in gold ETF. You won't even know that it's stuck in gold ETF. You would have forgotten about it. And you'll be finding some other way to buy your friends that gift, and you won't spend 500 rupees buying that gift. You'll spend him 10 rupees buying him a gift and say, sorry boss, this is all I have.
Because instantly we didn't receive the money from the demat account. That's the only reason.
Yeah. So these are the strategies we have to use and deploy to make sure we don't shoot ourselves in the foot. We will have more opportunity during this week because the way the market is poised, we'll see more FII selling this week and there'll be more downward pressure. The way things are going, especially with Russia and Ukraine, it's escalating very fast over there. So do keep an eye in the market. When you see these opportunities and you see these dips, do keep it in tiffin-coffee range. A lot of you are asking me and Dhanaa, can I increase? Yeah, one is tiffin. What is the tiffin-coffee range? Right? For me, my tiffin-coffee range is if I buy, let's say, one Indusin stock or I buy one Natco or Dr. Reddy, I'm done for the day.
For me, it's like 20 rupees, 30 rupees. That's it.
Yeah. So whatever your range is, see, then I'm done for the day. I do not buy just because I have some money in my account. I do not go shopping. Don't do that. That's not investing. That's gambling. So this week will open up a lot more opportunities. So keep an eye out on the market. And when you see these opportunities, do consider taking a dip now and then. Even if that market goes to a dead cat bounce, it is not going to push stocks like Natco and Dr. Reddy up by 10-15% in a single day. Those are very rare. And there's no earth-shattering news in any of these companies to push them up in a single day like that. So if anything, it will only be a downward of 7-8% if anything happens. That is more likely to happen than it bouncing by 10-12% in a single day. Right? So make sure you buy it in value. Other than that, me and Dhanaa.
One more thing you need to clarify, sir. If the portfolio, I need diversification part. If sir was tell clearly, South Indian Bank will bounce back. So everyone was thinking that I will entirely fill up with the South Indian Bank because that's my different preference. If I see any one of the portfolio like that, 80% or maximum of 70%, there will be a South Indian Bank only. And the balance 30%, they are filling up with the FMCG and IT. That's it. So they are not diversifying the portfolio. Mainly the Gen Zs who all are watching first time the video. Okay, it is a 20 rupee stock. Okay, we will enter. If it will be 30 or 40, it will be the benefitable thing. If I enter into the Indusin, it was 1000. It will just move to 1200, only 20%.
Yeah, that strategy. No, that strategy of just completely going crazy on one stock and hoping that's going to double again is not investing. Because the strategy there is you're putting all your portfolio in one stock, and if that price goes up, you want to sell it and book your profit. That's the idea. Why? Because you're not going to put your portfolio entirely 80% into South Indian Bank for 10 years. If you ask honestly, why are you putting 80% of your money into South Indian Bankers? That you're hoping that it doubles and then you can sell it.
Hoping, that's...
Yeah, but no, you want to sell it. If 22 rupees has become 50 rupees, you want to get out of it. I tell you, it might rain next Thursday. So you decide every day to wear a raincoat and come. You think it's stupid. That's the same strategy. If you're a value investor and you see that, if I see the strategy, then that's how stupid it is. So, like I said, be limited. And the reason why, I understand what Dhanaa says. You only have 20 rupees or 30 rupees every day and you feel like you must do something when the market is correcting. So I'm only buying South Indian Bank because that's the only stock in my price range and that is the only thing in that list which I have. It's not true. You can keep buying gold, like I said. Then you save, You have to be patient and diversify your portfolio. And there's no reason to think just because the market went down by 5% or you saw something go down by 3%, please do not borrow, beg, steal and invest. Right? Wait. This opportunity, when market goes all the way to the bear market territory of 21,000, it will be there for a few months. And only way to enter those kind of market situations is to keep now and then saving. And the best way to consolidate a little bit is put in gold and keep. Right? I understand. All of us wish we had lots of money to invest now, so we will have wealth in the future. It's a normal reaction, it's a human reaction, but it doesn't work like that. Like how I wish I could just somehow remove all my fat. You don't have. I wish I could just here, Dhanaa, you take some fat here. You need some here, right? And just give. I can't. We all do. We wish, but it doesn't work like that. So take it slow and steady. You will get there. Jhunjhunwala built his empire like that. Warren Buffett built his empire like that. And the biggest advantage you have over me is, Dhanaa, and your whole Gen Z generation is you have time. You're going to see huge market corrections at least 3 to 4 times in your life. I've already seen some of them. There's only 1 or 2 left in my lifetime before I exit. But you have a huge runway in front of you and you're going to have many more chances to enter the market. So be patient. You should focus more on learning now than investing. So focus on learning. Right?
That's learning part.
And when I'll have confidence that our people in our channel are starting to learn, and I see our view counts and subscribers going down. That means
definitely, sir.
Yeah, because that means people are learning and learning. They've finished learning with us and they're moving on to doing investing and doing other things. So that's great news then. I won't feel sad if I see our
Even I'm also, sir.
I think other editors would probably feel sad in our team, but I'm okay with that because that means people have learnt as much as they possibly can learn, and they are ready to now trying to learn to fly.
But that time also I will make video. But if you have the clarity, you need to clarify. Then we will come back.
Yes,
That
question
there is a
answer,
will be
question
doing
answer
that.
is always
Always
available.
there.
Yes, question Q&A, we're always there. But of course, Q&A is not like, can I buy this? That's not Q&A. Right? That is not Q&A. Please
This
stop
question
asking.
also come by, can I buy South Indian Bank? Like that question was happened. But
No.
I was
I
switched the question into that format.
Yeah, I don't like questions like, can I buy? Of course, and I do want to give out a caveat on this DMart video which I did. Yes, there is a DMart app. What I was trying to say was DMart is not present in, the app is not present in Chennai. If I download the app and I put my PIN code, they don't service this area. So that's what I was meaning to say. The DMart needs to up their game. And DMart's app, yes, believe it or not, was out in 2016, before the pandemic. Exactly. You yourself are shocked because that's how visibility of this app has been. Yes, people still go to DMart. People buy in DMart. I'm not said DMart has disappeared overnight, but a company needs to show growth and needs to show a roadmap to growth and needs to progress. There was a time when people, Nokia's peak, no one would ever believe you if you said Nokia was going to disappear, and it's gone.
No.
So all companies can be gone, right? Even DMart can be gone if they don't. The management of the company does not have the foresight to see where the market is going, where the future is, and keeps evolving and pushing boundaries and going there. The greatest thing about the Tatas, what I appreciate is they keep looking ahead. You know, the reason why they're getting into chip manufacturing, why they're doing electronics, why they're partnershiping with Apple, trying to make phones, because they see the future in electronics, they see the future in AI, they see the future in software and technology. A company which is making cotton, making bunions, making cloth, keeps on evolving. 150 years, you could have not imagined Tatas would be doing this. 100 years from now, Tatas will not probably even be selling cars. We don't know. But the thing is that Tatas will be there because they'll keep on changing, evolving and moving forward. And that is the kind of business I want to see. So I wish DMart success. People who believe in DMart, I respect you. I'm not against you. It's just that the way the company is looking right now, I don't see the earnings coming up to the point where it's going to justify the price where they are at their price to earnings ratio. So their moat is being breached. They have a lovely moat. They did have, I would say. It's being breached. And how are they going to prevent a full onslaught on their company is what we have to wait and watch. And if it reaches a point where it looks valuable to buy DMart, I'll be the first one to change my opinion and say, hey, I was wrong. You know, I have no problem admitting I'm wrong. I am not hell-bent on my opinions. I'm human, I'm fallible, I make mistakes, I'm ever learning, and I'm always ready to apologize first. You can be assured of that being my viewer. Anyway, moving forward, next bank. It's my fault, guys. Dhanaa does have 3 other banks. We will hit on these banks next week and try to get you more information on these other banks. What are these other banks we want to talk about?
Tamil Nadu Mercantile Bank, Karnataka, IDFC.
Anyway, thanks for watching. Anything else you want to add?
No, sir.
I kind of took the oxygen out of the room today, talking a little more than I usually do. And next time I'll make sure Dhanaa gets his pieces in too. And thanks for watching the video. And me and Dhanaa will join you again next weekend. Hopefully it won't be rained out. Take care. Be safe.
Bye.
Bye.